So how do you do a better job of cultivating buyers? Because something that we do really well here at this office is we database manage better than most, right? So we have all the systems, the tools, and the trainings, as well as the software to get leads and then to keep in front of those leads. Whether you're using the 31-day prospect follow-up system where you're calling them, creating new tasks to follow up with them in 3 weeks or 3 months based on your previous conversation. What I would do if I were you, and you're getting leads, and these leads are tomorrow leads, right? You have a consultation with them, and for whatever reason, they're not ready to buy now. And why are they not ready to buy now? Well, first thing, I'm gonna look in their bank account, right? A for asset, if we're on a pail. At a bare minimum, they need $5,000. Quite honestly, in today's world, I'll split the difference with you, Jimmy. So I'm gonna start with this. Hey, Troy, before you and I have an opportunity to talk about qualifying for your first home or what the payment would be like, let me ask you a question. Do you have access to $5,000 to $12,000? $5,000, Troy started our country, a lot of his clients may come from a circle of influence who will be eligible for a VA home loan. So on a VA home loan, even though you don't need a down payment, you still need to cover closing costs. And in today's market, we all know that the chance of you getting a seller to cover closing costs are slim to none. So I need you to have at least $5,000. Even if I waive my lender fees, I need you to have $5,000, right? So like the first thing I want to find out with them is, do they have this? This is a bare minimum, $12,500. That's what they would need more than likely, even if I was using down payment assistance. Because down payment assistance is only going to cover a portion of their down payment. They still have closing costs. And we always want to have people, when they buy a home, we don't want to wipe them out. At a minimum, let's keep a couple grand in their savings account. Now, I'm going to keep on jumping back and forth from how I'd qualify someone to also how I'm going to teach them basics of financial principles, right? Because if you listen to a Clark Howard, a Susie Orman, or a Dave Ramsey, they are going to teach you to have 6 months reserves. So if you picked up any Dave Ramsey book and read it, it's going to teach you these things. So what is 6 months reserves? Well, one, to me, it's an achievement to be celebrated. And like anything, you probably start with 3. Celebrate 3 and then work towards 6. But what that means is when I sit down, and let's say I'm a tobacco user and I love to dip Skull Straight Long Cut, because back in the day I did. And that was $5 a can, and I bought 5 cans a week. That was $25 or $100 a month. I had to put that into my budget, right? And I have kids, and my kids are constantly being invited to a birthday party. And I could average that out, but it's about 10 birthday parties a year at $20 to $25 per gift. I need to be able to budget in probably about $25 for birthday parties. And then what's my cell phone? What's my electric bill? What is my mortgage? What's my student loan? What are my groceries? Et cetera, et cetera. Basically write down everything you spend money on a monthly. And then whatever that number is, and let's say that number is $6,500. Well, Jimmy, what's that times 3? What's that times 6? $36 plus another 3, so $39. No, times 6. No, not 19.5. I'm sorry. So when I'm on that call, Troy, and I'm talking to that potential home buyer, not only am I telling them that before they can even consider becoming a homeowner, they need $3,000 to $12,000. I'm going to start reciting some of the things I've read or studied about personal finance, and I'm going to teach them what it means to have 3 months reserves, what it means to have 6 months reserves, strategies on how to get there. Don't make 6 your BHAG, your big, hairy, audacious goal, but start with 3. When you get to 3, celebrate it. By celebrate, I mean go to Kobe, right? Like, do something fun, that you normally wouldn't do, because in order to get there, you have to quit going to Kobe. In order to get there, you have to quit chewing Skull Straight Long Cut and slide down to Longhorn, because you realize Longhorn's $3 a can, which saves you $10 a week or $40 a month. True stories. I mean, I'm teaching from my personal life experience. So I want to teach them about this, introduce them to it. I tell them, look, I'm not a financial advisor, but I play one on TV. Now, if I want to have this type of conversation with a prospective home buyer, here's a couple things I need to know about them in general. Are they mature? Are they good at adulting? What's their career trajectory? Do they have the ability to save? What's their job longevity? Like if I'm talking to someone that was a cashier at Home Depot, then they were off for 6 weeks, then they were a leasing agent, then they were off for 3 months. Now they're working at a collection call center where they've been there for 3 months. And I'm like, you can't even hold down a steady job for a year. Or the job that you're on, my mom was a school bus driver. My mom by herself was never going to buy a house. Like, she's hardworking, she's super responsible, very nice. But at $1,800 a month, wasn't a whole lot I could do for her. So I might not spend that much time with someone like my mom if she was by herself. Because anything I'm going to teach her really can't be done. And unfortunately, there's only one of me. There's 8 to 10 hours in the day that I'm willing to work. And there's people lined up who could use this help. So I had to be selective, and I had to help those that I could help. Kind of like when you learned how to triage. Triage on the battlefield, you have to make some hard decisions. Can I help you or not? Because if there's 12 of you and 1 of me, I can probably only get to 4 or 5. Let's get to the 4 or 5 that I can save. We're triaging people from a financial standpoint. So I first need to recognize, how do they project? You know, kind of like colleges coming into high schools, and they're looking at bringing on certain athletes onto their program. Well, how do you project? I know you're only 15 now, but if you're 6'3" and you're 145 pounds, but your shoulders are this wide and your legs look like tree trunks, you project really well. You know, I'm pretty sure I can get you up to 225 pounds, at which point I can't teach 6'3", right? Or I can't teach 4.4 speed. You need to figure out how to do that with your buyers, and then you walk them through it. So you teach them the principles of and the basics of personal finance. You run them through the rules of thumb, right? What's the rule of thumb on a sales price? Well, ideally, your sales price shouldn't be more than 2.5 to 3.5 times your gross annual income. So again, someone making $30,000 a year as a assistant in the school system, let's run that math. 30K times 2.5 is 75,000. 30K times 3.5 is like 115,000. Anyone find a house for $115,000? No. So now you need to have a conversation of, are you willing to buy this house with someone else? Is there a significant other in your life? If so, what do they do for a living? Et cetera, et cetera. Credit score, right? That also prevents people from being able to buy a house. You pull their credit and you're like, ooh. When you look at it, I would encourage you to determine, is it a behavioral thing? Or is it just, oh my gosh, you just don't know what you're doing? A behavioral thing is, there's a collection for an apartment complex because I got evicted. A behavioral thing is I have a cable collection and a Sprint phone collection. To me, that's a behavioral. You haven't figured out how to adult properly. I don't know if I can fix that. But if I pull your credit and I'm like, okay, you have 3 medical collections, that's no big deal. More than likely what had happened is that the doctor sent the bill to your old address, you had moved, hadn't updated the doctor, I see it all day long. We can work through that. The other thing is you have 2 credit cards, both of them are maxed out because one's a Target card, one's a Lane Bryant card, and they're $300 a month. And you owe $290 on both of them. Okay, I can fix that. Like that person just has new credit, okay, let's work with them. So I think that's a lot of what you have to do when you're getting these leads is you kind of have to triage it. Which ones can I teach? Which ones are going to want to listen to me? And then do I know enough to explain to them the basics of personal finance? Right? Like we're not going to sit down with those people and start talking about how you can circumvent the IRA deductibility by putting money into a traditional IRA and then doing a conversion the next day into a Roth, which is called the backdoor Roth conversion. right? We're not going to talk to them about why they need to hedge with small cap versus Forex. Like, that's not the conversation we're having with our clients. Our clients, we're teaching them how to budget and why it's important to budget. We're teaching them rules of thumb on, hey, by the way, your mortgage payment should never be more than 31% of your gross household income. So your gross household income, now granted, you may have to push it to 35 or 36%, especially if you're in the lower income bracket. Or you may be willing to push it to a 41% because you have an adult child who lives with you who actually contributes towards the household bills, but we're not using their income to qualify.